Hi friends, how much cash do you have in your bank account right now? 10,000, 50,000, 5 lakh, 10 lakhs? You may be holding cash because of various reasons. For example, you might be waiting for your favorite stocks to fall down so that you can buy the dip. Or maybe because you are waiting for your house down payment to happen. Or maybe because you're saving up for your wedding. Whatever is the reason, please make sure you're not letting your cash sit idle, because you can grow your cash at a fixed interest rate of around 11 to 12%. And when I say fixed interest rate, what I mean is that no matter what happens in the world, whether the tsunami comes, whether the stock market falls down, whatever happens, your returns will be fixed at, let's say, 11 to 12% returns. This is possible by investing your idle cash in something called as corporate bonds. Corporate bonds are extremely easy instrument, but a lot of people do not understand anything about corporate bonds. So in this video, I'm going to show you how to buy corporate bonds and how to sell corporate bonds. Extremely important video if you ever want to get to fixed income instruments added into your portfolio. Before I start, let me first debunk 3 big myths that people hold about corporate bonds. Myth number 1 is that bond investing is only for long term. A lot of people think that if you're investing in bonds, you're locking your money for 3 years, 5 years, 10 years. All that is absolutely wrong. You can absolutely invest in bonds for short duration. For example, if you go to Vint Wealth website, you will find here bonds that are there only for 4 months maturity, 7 months maturity, 8 months maturity, 10 months maturity. My point is very, very simple. Bond investing doesn't need to be for long term. If you want to invest in bonds for even short durations like 4 months, 6 months, 8 months, 10 months, it is entirely possible. So please do not carry this myth that bond investing is only for 3 years, 5 years, 10 years, nothing like that. Myth number 2 is online bond platforms are not safe. So here is what you need to know on that. If you invest in bonds using SEBI registered bond platform, then your bonds are not stored within the online platform. Your bonds are actually stored in a demat account, just like stocks. So if tomorrow, let's say the bond platform shuts down, you can still access your bonds and you are the owner of those bonds. You will continue to get your interest. You will continue to get your capital back as per your bond terms, and you will continue to have access to your bonds. For example, let's say you buy a bond that is listed on the NSE exchange. In that case, what you can do is you can log into NSDL website, and after logging into the NSDL website, you will see all your holdings, bond holdings in there. You can individually check your bond holdings as well. So you are the owner of these bonds. Even if there was something to happen to the online bond platform, you remain the owner. That is what you need to understand, that bonds are stored in the demat account, very much like how the stocks are stored. Myth number 3 is that people think that they cannot exit the bond before the maturity period. That is absolutely not the case. For example, a lot of people think that if they've got a bond that has a maturity period of 3 years, they cannot exit it before 3 years. That is not the case. You can absolutely exit the bond. That is entirely possible. In fact, in this video, I will also cover how to go about selling a corporate bond. When you go to sell your bond, unlike fixed deposits where the bank generally charges a penalty, maybe 0.50% or 0.25%, in the case of bonds, bond issuer does not really care about anything. They do not charge you any penalty. The only thing you need to remember is at the time of selling the bond, depending on the demand and supply of that bond, you might need to sell it at a discounted price or at a premium that is determined by the demand and supply. But you can absolutely go ahead and sell your bonds. In fact, in this video, I'm going to show you how to go about selling a bond as well. Okay, so now I have debunked 3 big myths about corporate bonds. I hope now we are ready to go and find out how to go about deploying our unused cash so that we can grow our cash at maybe around 11 to 12%. I'm going to show you how to go about buying a bond. I'm also going to show you how to go about selling your bond. Okay, let me now walk you through the entire buying process of bonds. For this, step number 1 will be to open an account. So I'm going to use Vint Wealth as the bond platform. You are free to use any other platform. The reason I like Vint Wealth is because all the bonds that are listed on Vint Wealth platform, Vint themselves invest 2% in those bonds, meaning that they have skin in the game. That's why I like this particular platform. And the UI is also very, very easy to navigate through. I'm going to show it to you. But again, you are free to go with any other bond platform that you want want to go with? In case you want to go with Vint Wealth, I've given you the link in the description and in the pinned comments. Opening the account is extremely simple process. You can easily figure that out. But in case if you want to see the step-by-step process, towards the end of the video, I will give you a small clip that you can watch and open your account very, very easily. Once you've opened the account, then comes the step number 2, which is going and selecting the bond that you want to deploy your cash into. So as soon as you log in, you will see a homepage like this. Simply come down here and click on view all. So we are going to see which are the live bonds as of now, and it will list all the live bonds for you. First thing we need to do is decide what is the duration of your cash investment that you want to go with. You might want to go with 4 months, 6 months, 8 months, 1 year, 2 year. So what you do is sort out these bonds by tenure here. So let's go low to high, and you see the first bond here is for 4 months, 7 months, 8 months, 10 months, and so on and so forth. So you can decide based on your requirement how long you want to invest in one particular bond for. The second thing we need to decide is how much money you want to invest in bonds, because you will find here bonds that have minimum investment as low as 1,000 rupees here to maybe let's say 10,000 rupees or even 1 lakh rupee. Depending on what your requirement is, you can decide and shortlist couple of bonds here. For example, let me just come down here and I'm going to pick up, for example, let's say Navi 2nd April 2025. It is for 13 months duration and minimum amount is 10,000 rupees. If you're a beginner in bond investing, please make sure that you start very small. You might want to pick up those bonds that have the low minimum investment amount, and the duration is also shorter, 4 months, 6 months, because by investing in a short duration and a small amount bond, you will test out the entire process. You will make yourself really, really comfortable in terms of whether you are getting the interest on time or not. And also to make sure that you're comfortable with the entire bond investing process. Otherwise, sometimes you might get scared. We need to really make sure that you are comfortable with the bond investing process. Therefore, I would highly suggest that you go with smaller amount and shorter duration so that you're comfortable. So for the purposes of this demonstration, I'm going to pick up Navi April 2025. Click on it. Now, what you see here is that if you were to invest in this particular bond, by the way, this is not a recommendation, I'm just picking up this as an example, but if you were to invest in this particular bond for 1 unit, you will be paying around 9,962 rupees at the time of recording this video, and after 30 months of maturity, your total pre-tax return will come out to be 11,091 rupees. This gives you yield to maturity, which is in bond parlance called the effective returns to be 11%. Now I've explained what is yield to maturity, how is it calculated in this particular video. If you're not familiar about the basic terminologies of bond investing, then I would say that please go and watch that video afterwards. But your net return is what is called yield to maturity on a yearly basis. So in this example here, by buying one particular unit of this bond, you are going to invest 9,962 rupees at the time of recording this video. It might change depending on when you're watching this video, but your pre-tax return will be 11,091 rupees as such. Now you will not get this 11,091 rupees only after 13 months of maturity. What typically happens is you are going to get this interest on a monthly basis. Now this may vary from bond to bond. In this particular example, you are going to get interest on a monthly basis. And in fact, you can come down here and you can see the exact schedule of when are you going to get these interest. If you click on this view more here, you're going to see the schedule of these payments hitting your bank account. And if you come down here, you will see that the interest amount, and also at the end of the maturity, you're going to get your principal amount back, which is 10,000 rupees. So your principal amount here is 10,000 rupees. You might ask me a question that, Rahul, why my investment amount is lower than 10,000 rupees here? It is 9,962. For this, let's have a look at this breakdown here. If you click on this, you will see that principal amount is 10,000 rupees, but your accrued interest is getting deducted. What do I mean by accrued interest? Very, very simple. I am recording this video on 4th of May 2025, meaning that if I were to invest in this bond on 4th of May 2025, I am not getting my interest for the period which is 4th of May to 17th of May. You can see the monthly duration here for the interest payment here. I am getting my first interest on 17th June. So meaning that it is operating on a monthly cycle, which is 17th May, 17th June, 17th of July, like that. And since I am buying this bond on 4th of May, I am losing out on interest between 4th of May and 16th of May. That accrued interest has been reduced already from the price here. That is number one. Second is that there is a brokerage charge. Thirdly, there is a seller discount that you are getting on the face value of this bond. Therefore, your investment amount comes out to be 9,962 rupees per unit. Now, depending on how many units you want, accordingly calculations will change here. But as I suggested earlier, if you are starting afresh, I would say go with the lower amount so that you are very comfortable with bond investing. Now, before you invest in any bonds, I picked up this as a random example, but before you invest in any corporate bond, you must make sure you do at least 3 minimum checks. Check number 1 is what is the risk that you are taking in investing in this particular bond. So when you invest in corporate bonds, the biggest risk is the default risk. What do I mean by default risk? I simply mean that what happens if Navi, that is the NBFC you are in buying this bond from, what happens if Navi defaults on this particular bond? Meaning that they stop paying you your interest, they stop paying the capital as well, because they might go bankrupt hypothetically. If that happens, this is called the default risk in bonds terminologies. And typically what happens is if a company defaults like this, then whatever company's assets are there, they are sold in the market, they are liquidated, and whatever money is collected from the sales of these assets, that money is distributed among the bond holders. Now that entire process may take some time, but this is what essentially the default risk is called. And what are the chances of a company defaulting? Now nobody can really predict what can happen in future, but a good indicator will be credit rating. So that brings me to check number 1 that you must do, which is the credit rating. So if I click here, this bond's credit rating is A. What does this mean? Let me quickly click here, and if you come down here, you will see there are 4 ratings here: AAA, AA, A and BBB. AAA is the most safest bond, and of course because they are most safest, their coupon rate or the interest rate is on the lower hand, 7 to 8%. Then comes AA, which comes with slightly higher coupon rate, which is 8 to 9.5%. Third one is A, which is 9.5 to 11.5%, and then you have BBB, which is 11 to 12%. Now here you will have to take your own individual call depending on your risk appetite, whether you want to go with the safest one or whether you're okay with AA, A or BBB. I personally like A, that is a good balance between the credit rating as well as the coupon rate, because I really do not want to go to, let's say, 6% or 7%, because then I could very well deploy my cash in a fixed deposit, right? Here I am getting, let's say, 2% extra or 1% extra depending on whether you're looking at AA or AAA. So in my view, A offers a sweet spot between the coupon rate as well as the credit rating. But please make sure that is your call. That is an individual call, because depending on your risk profile, you might decide to agree or disagree with me, and I respect your decision. My last point on default risk is that so far on Vint platform, 100% repayments have been successful. So that gives me another confidence to go with Vint platform. Now coming back to the second check we need to do, let's just come out of it. And the second check that we are going to do here is that we are going to look at something called as collateral size. So if you come down here towards the bottom, you will find other bond details here. Click on it and you will see something called as collateral size here. Extremely important here. Now what is collateral size? Collateral size simply means that Navi company in this example has kept 1.1 times of the issue amount worth assets as a guarantee or a security. Sometimes when we take loans, right, we put our assets against the loan as security. Very similar concept here, in which Navi has kept 1.10 times of the issue amount as the collateral in terms of the assets in the business. Now that gives us a lot of confidence as a bond holder, because tomorrow if Navi were to fail or go bankrupt hypothetically, then what is likely to happen is that there are assets that have been tagged to this particular bond, and those assets can be sold off and the money can be recovered and the bond holders can be compensated accordingly. So therefore, please make sure you're looking at the collateral size. That will tell you how much confidence you have in this particular bond or not. The third thing that we are going to also check is the financials of this particular company. So for that, please go to financials here and you will see whether the company is making losses or profits. So PAT, profit after tax, is what you need to check. And please make sure that the company recently, maybe 1 year, 2 year or 3 year, has been consistently making profits. Extremely important check that I personally do to make sure that I'm only investing in a company that is profitable, that is not in a loss. Therefore, my risk hopefully is on the limited side. Also, you can check many other details here, for example, coupon rate, for example, where the bond is listed, many other details. I've covered all of these details in my previous video. Therefore, you can go and watch that video if you want to learn every terminology that is listed here. Once you're satisfied with your bond, then what you can do is simply go and invest now, make your payment. You can make your payment using UPI or whatever. And then once your payment is successful, you will see this particular bond coming into your dashboard as an order. You will see exactly when your bond is likely to get credited into your account. For example, here, if you do a transaction on 2nd of May, which is Friday, then typically it comes on a T+1 basis. So you are going to get that on 5th of May, Monday. That is the timeline that you will have to see here. And in this example, on 5th of May, you can very well go and check your account and you will find that particular bond on your account. This is the entire buying process of bond, and depending on how much of cash you have, what is your time horizon for investment, you can go and select the quality bonds that you like. I hope so far you're liking this video. If you are, please press the like button. Let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. With that, let's move to the second flow, which is how to go about selling these bonds that you're buying on WintWealth in case you don't want to hold them until maturity. So for example, if you pick up a bond for 2 years of maturity, but after 6 months you realize that you don't want to hold this particular bond, you need your money back for whatever reasons, then you can go and place a sell order that I'm going to show you now. Okay, so how to go about selling your bond that you bought from WintWealth platform in case you don't want to hold it until maturity. Very simple process. As soon as you will log in, what you're going to see is you're going to see your investment or your portfolio listed at one place on your dashboard. So for example, here you can see all your investment. What you need to do is pick up the bond that you want to sell off, and now it will show you that bond's detail. For example, here you can see that you bought this particular bond at 994.61 rupees level, and right now if you were to sell this particular bond, the value of this bond right now is 1004 rupees 4 paise. Now this price could be anything depending on the demand and supply of this particular bond, depending on various other parameters. It is entirely possible that it might be higher than your buying price, which is the case here, or it might also be possible that this particular value might be lower than the invested amount, in which case you're selling it at discount. Both the possibilities do exist. So ideal scenario is that you hold your bond until maturity, but in case you need the money, you have this option of going and selling it off. But please be aware that you might need to sell it at discount or premium depending on the various factors. So if you're happy to go and sell this, proceed to sell, and you are going to see now that the amount is lower than your current value. Why it is the case? Because if you see here, there is going to be an upcoming payment. So if you click here and you see this, there is going to be an upcoming payment. Typically what happens is that if you're selling a bond after the record date of the interest payment, then you're going to get the next interest payment, and therefore what the system is doing here is that it is deducting that amount from your current value. That is why you see the minor difference here, but it may not be the case when you're going and selling your bond. It's an entirely straightforward process. You simply go and sell your bonds. Once you've verified all these details, simply click on proceed to sell, confirm you are happy to sell this particular bond, and sit back. What is likely to happen is that you will be getting updates on your WhatsApp as to what is happening with your sale. So in nutshell, it is entirely possible to sell your bonds. If you bought it from WintWealth platform, you can sell it back on WintWealth platform. That is entirely possible. The only thing you need to remember is that you might need to sell it at a discount, or you might be able to sell it at a premium depending on various factors that we have talked about. Let me quickly speak about the taxation on the interest that we earn on bonds. So the tax on interest that we earn using the bonds is taxable as per our slabs. However, if you fall, let's say, under 30% of the slab, then there will be a 10% TDS on the interest. Remaining 20% of the tax you will have to pay while filing your ITR. If you are under 20% slab, again 10% TDS, 10% at the time of filing your income tax return. It is exactly the same even for 15% slab, that 10% TDS is deducted, 5% at the time of filing your ITR. If you are under 10% slab, then your entire tax will be deducted at the source, which is TDS, which is 10% for your interest. And again, if you are on 5% slab, then you will be still charged 10% TDS. That's how the regulation, that's how the ruling actually works. And you can claim the remaining 5% while you're filing the ITR. These are some of the rules. In fact, if you're falling under 0% slab, it still will deduct 10% TDS because that's the ruling, but you can claim this back at the time of filing ITR. So the tax calculation is extremely straightforward. I have sort of given you that overview as well. Let me now walk you through Vint12 account opening process. Simply go to your mobile and download Vint12 app. Then you enter your mobile number that is linked with the Aadhaar card. You will get an OTP. You do the authentication, and after that you will have to set up your PIN. Once you've set up your PIN, then you start your KYC process. First, you will have to enter your basic information, for example, your name, etc. After that, you will have to do bank verification. Now, this is the bank account where your interest and capital will come back. So make sure you add appropriate bank account details. After that, you will have to verify your signatures. Once it is done, you take a selfie. And final step will be the DigiLocker, verify your Aadhaar and PAN card details. Very, very straightforward process. And after this last verification, you are ready to invest in bonds. So in this video, I have covered a lot of grounds about how to go buy and sell corporate bonds, how to go about making some minimum checks on the corporate bonds so that you can grow your cash at a fixed interest rate of 11 to 12%. I hope you liked this video. If you did, request you to hit the like button. Let me know in the comments a simple thank you. With that, I hope to see you in my next video. Until then, keep rocking.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks, including delay and/or default in payment. Read all the offer-related documents carefully.